In March, nearly 4,200 sales. This is residential. This is new homes. 11-year high. That's more than 14 times the figure that we had back just the previous month. And of course, keep in mind, it was during the end of Feb when the government came out and said no more cooling measures, and, well, March Madness, to some extent, then ensued. Rosanna Tang is with us here on set, head of research, Hong Kong at Cushman in Wakefield. Well, not congratulations. Well, congratulations for making the set.
On a holiday.
On a holiday. Thank you for gracing us with your presence. What have you guys seen as far as home prices are concerned?
Well, definitely there is a shift of sentiment after the government dropping the cooling measures, right? As you mentioned, the transaction volume has picked up quite substantially or notably, and they're coming from a couple of different forces. First of all, we do see that the developer side, they are more actively launching their new sales because in last year, perhaps of the interest rate rise, perhaps of the market situation, there has been hesitating or delaying some of the new launches. And on the buyer side, of course, no matter for the first home buyers or for the upgraders, they are more actively seeking in the market again. Some of them have been urging to the first home market, but some of them also actively seeking and upgrading in the second home market as well. And there are the third forces that we've seen is the coming from the new talents. You know, the government has also announced a Trove for Talent scheme a year ago. Yeah. And then we do see an emerging and increasing number of these kind of professionals coming across the border from the mainland side, that when they arrived Hong Kong, some of them has been actively purchasing in the market again because of the drop of these cooling measures.
Would you say this is a trend that can last, or is this just something that's short term?
Well, I think it would take another month or so to observe because, as you said, currently the transaction volume in March, some of the data may still be delayed. So I think everyone is watching whether it could sustain in Q2. But at the same time, some of the fundamental changes, like what we mentioned, talent schemes, the Trove for Talents, these kind of increasing trends of the incoming talents, we do see that it would be ongoing at least for another year because the policy is still there, and these kind of new driving forces would definitely help to support the fundamentals of the Hong Kong housing market as well.
When do we start to see, and this is my pessimistic side coming out, when do we start to see the impact of still higher rates? Because people coming in are locking in their mortgages are still quite elevated, unless you're a cash buyer.
So I think it's very critical to observe the interest rate movement in the second half. I think there are different forces or noise seeing in the market, with views seeing some of them are believing the rates may come down in the second half, but some of them may see that rates may peak, but it may not necessarily come down in the second half. So I think the market is still watching in this piece of interest rate movement, which will also impact on the buyer sentiment. And the residential market itself is very sentiment driven sometimes, you know. So I think it would be an indicator for us to observe.
You've been tracking some of your indications, right? This home price index.
Yeah.
Are we seeing a sign that at least a floor has been reached when it comes to home prices?
Yeah, so in terms of the pricing, we have the Cushman and Wakefield small to medium-sized flats index. And no matter for the smaller units or for the medium units, the home price did hit the bottom in February. So we do see the price rebound in March by around 1.5% month on month in March after the cooling measures has been dropped.
Right. I guess one last question before we move on to things like commercial and office. Are we still seeing developers discount just to move inventory as well? Because that goes into the future supply as well. Because a lot of the inventory was frozen last year.
Yeah. I think it depends on different developers' strategy. But overall speaking, I think most of the new launches, to be honest, they have been launching at a very close to market price, very close to the second-hand market, so as to attract the buyers. And that's why we do see that the transaction volume, in terms of the proportion, it has been refocusing in the primary units again.
What about for the office market? Are we seeing any signs of improvement there?
Yes, in a good way. We do see in terms of the new leasing area. In the Q1, we have the preliminary numbers that come out, which has jumped up by around 40% year on year in terms of the new leasing area. So this is a good sign. I think at the same time, it's also because of the market. We do see there are a couple of new projects that are going to complete or has been completed. Which,
now we can see it right across from where we
indeed.
Which,
in a way, providing some of the better quality options with some of the affordable cost. So some of the tenants, they can do the flight to quality move with cheaper rents.
Upgrading.
Yeah, upgrading, flight to quality.
Well, what's the vacancy rate in Central, generally?
We do track, instead of vacancy, we track availability rate. So for Central, it's currently around 15 to 16%. For the overall Hong Kong availability rate is around 19 to 20%. I would say it may look high in the short term, but at the same time, as we just mentioned, while ESG elements is still very one of the tick-the-box items for some of the MNCs, it do present some of the options for the occupiers, good excuse to move around in the market for better quality buildings.
I was going to talk about the retail side because I feel for the F&B industry here in Hong Kong. I felt like this weekend people were either out of town or they were up north on the mainland. How bad is retail right now?
I think there are two sides of the retail story. On one hand, yes, in a way, we do see the rebound of tourists in town. I think currently the incoming tourists is around 70 to 80% compared to the pre-COVID level. But at the same time, as you said, we also see that Hong Kong local people, they are consuming across the border in the Greater Bay Area, which in some ways, which will also hesitate some of the retailers, F&B operators on their expansion plan. But at the same time, we still we see some new forces because of this spending habit changing, like Hong Kong people getting more used to the mainland brands across the border. Hence, there are some mainland operators, they are actively looking to lease their space and expand their footprint in Hong Kong, no matter for the lifestyle retailers or F&B retailers, or some may involve the retailtainment retailers coming across the border. So we do see it as a new forces as well.
What other trends are you watching this year?
In terms of retail?
We're all yours. Anything you think we should know?
Well, I think for this year, still the interest rate is still one of the market concerns. So this is one of the things that we closely monitor, not only necessarily impacting the residential market, but also for the commercial investment and overall market sentiment as well.